Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, yeah, run it, run it. Ooh, I really feel it's my time.
Everybody, happy Monday. Welcome back to the morning show here on Stock Market TV. Spencer Israel, Steve Strazza, Alfonso de Pablos. No JC today. He'll be back tomorrow, which means, you know what that means? Today is not a morning show. Actually, it's a Strazza show. That's right. That's what we got going on this morning. We're talking international. That is what's on Steve's mind. And we'll talk about the bounce, and then the bounce down, then the bounce up, and then earnings, dominoes. I don't know. MicroStrategy. I don't know. We'll see what happens. We'll have Kenny Glick stop by. We'll have Sam Gatlin stop by, and we'll have Andrew Thrasher stop by at 9:15 from Thrasher Analytics. Here we go, chat. Are you ready for this? Are you ready? I don't know if you're ready. Well, even if you're not ready, we're going.
Hello. Happy Monday, everybody.
What's up? What's up?
Did you have a nice weekend, Spencer?
I had a great weekend. The last 2 weekends, I have had to-do lists. I love me a good list, and I've checked everything off my to-do list. Both 2 weekends in a row for me. Yeah.
What an accomplished feeling. You know, just
wonderful.
Knocking them off.
Wonderful.
What'd you do? Anything good?
No, nothing that would make for a good story. I waited a half hour for a pretty good car wash. Haven't gotten a car wash in God knows how long.
Yeah.
Did some things around the house. No, nothing exciting. It was just a productive weekend. And I did most of it Saturday, so that Sunday I could watch a lot of sports because it was a big sports day in my house.
How about those New York Knicks?
Ooh, how about it?
Wow, Karl Anthony Towns has arrived. So a lot of the viewers may or may not know this. Spencer identifies as a Detroit person. So in a game like this,
I wouldn't go that far.
All right, well, sometimes. So in a game like this, New York Knicks, Detroit Pistons, how does that make you feel?
Yeah, I'm a Knicks fan. I've been a Knicks fan my whole life. I was never a Detroit sports fan. Detroit is like it's like one of my adopted cities, but I don't root for their sports teams. I love Detroit, not for their sports, for everything else, for the crime and the abandoned houses, and that's all great. But the sports, not so good. Yeah,
you're there for the crime, not the Lions.
Right, exactly. I'm there for the jokes.
Cool. It was a great sports weekend, though. Totally. I was like at all-time highs in my Hard Rock Bets account, and then within the course of 2 days, I'm in like a 75% drawdown.
Yeah. That's how they get you, man.
I get you.
That's how they get you every time.
Yeah, just when you're feeling good.
No, Rachel in the chat, that's exactly right. I'm getting my stuff in order. I got things to get in order. I got things to assemble and organize and to-do list to do because I'm not going to have the bandwidth to do it in a few weeks. So that's what I got going on. All right. Don't forget Little Caesars Pizza, which is disgusting, Josh, but I'll take your word for it. Let's go with State of the Markets, and let's state the markets.
Let's do it. So S&P 500 futures, stock market futures in general here, muted open, down about 0.15% in the S&P 500 E-minis right now. Coming into the day, natural gas with a nice little pop in terms of the commodities markets. Platinum, palladium up nicely. Nickel, orange juice has been red hot. Other than that, you got your precious metals a little bit lower, crude oil a little bit lower. Aluminum, gasoline, heating oil, all a little bit lower on the day. In terms of your currency market, euro up slightly here, but just about nothing. Pound up about 1/3% and your Japanese yen is up about 1/3% as well. Dixie is really in trouble here. If you look at a chart of the US dollar index, you zoom out a couple years, we've been in this range, right? We've been in a range really since late 2022 between 100 and, I don't know, 108 in the DXY. And we popped out of it late last year, coming into the new year. And then that failed miserably at the upper bounds, got to about 110, and then they slammed it. And the US dollar has been so weak pretty much all year, right? And went right to the lower bounds around 100, where we had, some pivot lows from September, earlier last year, 2023. And then they knocked it down right through, right? So if we get downside follow through here in the DXY and breakouts in some of these, large weightings, so euro, yen, and pound really comprise over 80% of the dollar index, and they have these really nice bases, really nice reversal patterns in place right now. If those all break out, you're going to be looking at a weaker dollar environment for longer. So just something we've been thinking about internally. In terms of the bond market, a lot of talk about bonds. Everybody likes talking about bonds these days. So US 10-year doing pretty much nothing out here today, trading around 4.28%. So that's really about it. And then Bitcoin had a, really snoozer of a weekend, nothing going on. And then all of a sudden, Monday morning, futures markets open up. We're starting the week in TradFi here, and Bitcoin nice pop, trading basically back towards new highs, its highest level since that would be February. And crypto market,
you're right about that. Yeah, February 24th. You're a good
yeah,
call.
man. And crypto market internals, broadly speaking, cryptos, the altcoins, trending a lot better. I think supportive of a move for Bitcoin back to all-time highs. And Spencer, when you think about it, markets got hit across the board, around the globe in March. Big sell-offs, right? The nature of those sell-offs obviously varied, what risk assets we're talking about. And then early April, first week of April, all of a sudden, they established a tradable low, and we've seen historic rallies, monster rallies, right? So March, big sell-off, April, big rally. And all of those kind of indexes around the world, whether we're talking about the German DAX or something like EFA, developed equities, or we're talking about the S&P 500, the NASDAQ 100, or small cap Russell 2000, right? The nature of those sell-offs and the nature of those, subsequent bounces are different. They vary. Some indexes, right, the strongest stocks around the world, particularly when priced in US dollars, so some of these MSCI international ETFs I'm talking about, they're already back. We have some examples. They're already back to, and in some cases, through their cycle highs. So just skip the first couple charts here, Alfonso, and let's just look at something like Germany, UK. What a great example Spain is. Is Spain stronger than anything right now? Yeah, so this is, what is this, Germany? Yeah, so look at that, Spencer. These are chart patterns that we just have to buy. And you think of what's going on, this, trade war and global trade turmoil. Everything's a mess. Europe's in a recession. Meanwhile, this is Germany. And despite the massive sell-off in March, that was just a shakeout. You get these sloppy moves when you're coming out of structural patterns like this, right? This is a monster base. It goes all the way back before the financial crisis. There's so much price memory here, right? So you see sloppiness and false starts and little shakeouts and whipsaw moves all the time at these big base breakout levels. That's all that happened here in Germany. And now it's we're right back off to the races. In fact, you want to see that kind of volatility, right, coming out of a base. That creates some awesome entries. Dropped a VWAP from the pivot highs a few weeks ago. Boom, you just get in on the reclaim. That's some of my favorite stuff, especially when you zoom out and you have a pattern like this. Show the next one. It's not just Germany. This is happening across the board in Europe. This is the United Kingdom. Back to those cycle highs and about to break out of a multi-year base. Next. Spain.
Wow.
Spain looks as good as anything right now, Spencer. And look at that little whipsaw, right? It's oh my God, massive failed breakout. Nope. Gotcha. Scoop and score.
Does your general strategy of just using the ETFs / indexes as a signal and then going to find the stocks under the surface, does that still apply here, or are you gonna go would you buy any of these is my question.
I'm in so many of them. Yes.
Okay.
Yep. One of my favorites is Sweden.
So one of the cool things about all these charts is you really haven't missed anything yet. right? Because
Get in right now.
they move so slowly that you really haven't missed anything.
There's some juice in some more than others. Throw up like something like Poland, right? You can check. They all have different betas, obviously. So you could find the ones that are a bit spicier than others. Something like Poland, this thing's gone from 10 to 30 off the 2022 lows. It's not terrible, right? It's not like the NASDAQ.
I was referring to like the last like 4 months, right?
20 to 30 off of last year's lows is not bad. So yeah, I do own some. I always am mindful of what the charts of the local currencies look like, right? And how much of an effect the currency will have, because what's been going on right now with all of these MSCI indexes is their local stock markets are working, right? They're definitely working, but their currencies are really working and breaking out against dollars. And when you buy something like the MSCI Poland, you're effectively getting short dollars, long Polish zloty, in most cases probably, right? And then long the local equities in Polish zloty. So you have exposure to both the currency, right? And you're fading dollars, which I really like in this environment, as well as the local market, right? The local equities. So you gotta look at both charts.
If you didn't want that currency exposure, there are a handful of these that offer currency hedge versions of them. I don't know if you'd want to do that right now, but you don't.
No, you want the Forex exposure right now,
right?
Especially as U.S. investors, we're very long dollars, right? We're super long dollars, all of us. So by buying these international ETFs, you are you're mitigating your I guess dollar exposure a little bit, dollar downside risk. Which right now, do we have a Dixie chart here? Can we show what I was just talking about? Like 100 in DXY is just huge. And if you look at any of these charts individually, euro, pound, yen, look at something like the Swedish krona. Oh my, what a beautiful base. All of these developed market currencies are about to break out of massive multi-year reversal patterns, right? Like textbook primary trend reversal patterns. What does that suggest or indicate? Lower dollars for longer, higher euros, higher yens, higher pounds, looking out years. So you go buy these international ETFs now. You have these structural, bullish base breakouts, and the currencies are breaking out, right, and embarking on new primary uptrends. It's all working. You could check both boxes right now. International equities never looked so good in my career from the perspective of someone who's investing with U.S. dollars.
Yeah, this is something I've grappled with really since I started my investing journey 10 years ago, which is that for my entire career as an investor, the U.S. has been the only game in town. Yeah, I understand that wasn't always the case, but it's very, very, very hard for me to overcome that recency bias. I think we are all products of the environment that we grew up in, and I grew up in a U.S. only environment, right? So it's very hard to fight that. And I'm dealing with it now. I mean, I have basically zero international exposure at the moment, and I'm dealing with that. Not great, but it's awfully hard, man. It's awfully hard to sort of change when it's been. This is all that we've known since 2008, 9, basically, right? So it's just very hard to overcome that.
And sir, this attitude is the attitude from the majority of the investors that I speak to.
Yeah, for sure.
I think it's going to take a lot of time and probably a good deal of underperformance, right? For investors to unlearn what was a really hard lesson, right? In terms of leadership regimes.
What does Yoda say? You must unlearn what you have learned, and I must unlearn what I have learned.
Yeah. Here's the best advice for most people.
I don't know.
Is a sleeve of international won't hurt you, right?
It will. It will if the U.S. crushes it again, and you're gonna be like, "Why did I just throw it all in the queues?" And my life would be awesome right now. But
do we have XLK SPY? Because this is a great topic right now. U.S. growth has been basically the mecca of this sell-off, right? it's been the area that's been hit the hardest for sure. U.S. growth stocks, ultimately the best performers. I'm talking about the Mag 7s, all that stuff. All of a sudden, things don't look so bad. I think you're going to get a sweet mean reversion move. And just as everybody's like, throwing in the towel on U.S. tech, I think you're going to get a couple months of outperformance and leadership, and this line moving up and to the right again, because you have patterns like this. Semiconductors look similar, software, a lot of the relative ratio. So this is tech relative to the broader market. They have these little failed top situations playing out, right? And they really look like they want to hook higher right now. And if the market does flip back into rally mode, I think tech leading it and the Mag 7s leading it again just makes sense here. At this point, it's a catch-up trade, right? We just talked about all these stock market indexes around the world that are already back to their cycle highs. Why wouldn't the U.S. follow, right? So it's going to be the Mag 7s that kind of do most of the driving if that scenario plays out.
This is the part where I mentioned that most of the Mag 7s report earnings this week, Wednesday and Thursday.
There you go. So there's your catalyst.
Yep.
Yeah. Bang. You know what I mean? They've all been discounted, taken significant haircuts recently. The fundamentals haven't really deteriorated
yet.
Well, hey, we'll see. We'll see.
Well, they wouldn't have deteriorated for last quarter, certainly, right? So
it's funny how that works, Mark, Spencer. It's like the market is almost forward-looking or something, and price is in, right?
Mm-hmm.
Worse fundamentals in the future before it's reported.
You know what this feels like? This feels like Lucy. This feels like Lucy in the football, like with me, right? Or not with me, with anyone, right? Like with international outperformance, like when I finally bite the bullet and say, okay, I'm doing it. I'm buying some international stocks. Maybe I'll buy some gold. I'm not gonna be as much of a home country biased investor. And then boom, they pull the football out from under me again. And I'm thinking, why did I fall for it for the 50th time? Right?
I've been taking profits in gold.
Okay. Yeah. Not just you.
Everybody's in, man.
Everybody is.
Everybody's in. This is how things kind of end. We got to read off one headline here. We said we would do fun press releases, didn't we?
Yeah.
We said we'd do it. So MicroStrategy, we saw it. They just don't stop. Why can't I?
MicroStrategy has they have an at the market offering, I believe, where they can just sell stock anytime they want and then use it to buy Bitcoin, because that's what they do. So that's what happened last week.
That's the strat. That is the strategy.
Right. So they sold what was it? They sold at $1.4 billion. Did I get that right?
MicroStrategy purchases 15,355 Bitcoins between April 21 and April 27th at an average cost of 92,737. It makes me think of that like can't stop, won't stop gif. I mean, you can't stop these guys.
They sold 4 million shares to the market, and then they use those proceeds to just go and buy about 15,000 Bitcoin, right?
That's right. They call it smart leverage or something.
I don't know.
Intelligent leverage.
Wasn't there a thing? I didn't I see this in Louis' email this morning, or you put it in Slack on Friday? Oh no, that was XRP. Never mind. Forget that. Moving on. Okay.
Brasup nailed it. Brasup said Nvidia trades at 19x forward PE.
That's not a lot.
That is cheap as hell for a company of their size that's growing at the magnitude that they're growing at. The market doesn't believe it, is what that tells you. I think Nvidia is on sale here against 100 all day. Speaking of failed tops, a lot of them are cheap. A lot of them got cheap. Google, I think it's ridiculous what's happening to Google right now. Everybody hates it. See, Google's just like punching bag.
Gave back a good chunk of those gains from the earnings pop on Friday.
You know what else is on sale?
No.
China. How about that Alibaba? Right? So back to the March sell-off and the April bounce. You know what it amounted to for a lot of things, Spencer? Just a really lovely reset, right? A chance to get in at better prices, maybe. This is still a textbook reversal pattern in the Amazon of China, Alibaba. 120's been our level, right? Look at that VWAP from the prior cycle highs, just coming right in here. giving us like a perfect trigger point to get into this trade. I think comes in right around 123. You could also drop the VWAP from the pivot highs here, right? The failed breakout highs. That comes in around 118. So it gives you like a $5 range to scale in for an entry. It doesn't get much prettier than this. But that's what the sell-off in March really did, right? Retests everywhere. Chances to get into some of these patterns.
Alibaba currently trading inside of a gap. That gap from the third of the fourth. That's
it just looks good, Spencer. It looks really good. And then also, if you want to get into the weeds, speaking of how you invest in these international ETFs and ADRs, and you want to be mindful of the currency, something like this. I don't know if it's Hong Kong dollars or yuan for somebody like Alibaba, but either way, Chinese yuan was sitting like on a cliff here, just testing a shelf of lows over the past several years, and it broke down a little bit and then it scooped higher. And if the yuan is not falling apart, that's probably a really good thing, right? Considering everything that's going on around the world. So I think that's encouraging too, as someone who has, super overweight exposure to China and Hong Kong and their equities. You like that?
I haven't been looking at China too much these past few weeks. I didn't realize that Alibaba come all the way, essentially halfway back, basically, right? Because it got down to 95, the all-time high, or not the all-time high, but the previous high was 148. So it's kind of regained half that move, almost half that move. To me, the 50% retracement is kind of a symbolic thing. So
you love your non-Fibonacci retracement number.
I like keeping an eye on that. But yeah, it actually does look juicy, especially because it's done nothing, literally nothing for 3 days now, 3 days in a row.
It is juicy. It's great. You should get some.
Barely moved.
How about Brazil for you? Is that below your line?
No, I mean, I basically do all of my, a lot of my international stuff starts from the ETF power rankings that we send out every day, and once a week is the international. So today was the international version. So that's kind of where I get my my analysis of what is working and what is not. So you asked about Brazil. Well, yeah.
Like these Brazilian ADRs, this StoneCo and PAGs, those little tactical bases that we wouldn't shut up about just a few weeks ago, those resolved higher. They've already returned like 20% on the common. We're up, man. We might be up like 7x soon on the Stone calls.
Huge divergence in the emerging market world. Huge, because you got the best performers are emerging markets. The worst performers are also emerging markets. So,
not all emerging markets are created equal.
This is true. This is why you basically can't own those like broad like emerging market funds, right? Because
I think you got to own Philippines, EPHE, Vietnam, VNM, Thailand is really interesting. That's THD. They're all holding like really big levels and rebounding off of them. I think South Asia has arrived, and it's time for everybody to be involved. JD, catch up. I like it. Topher's got to hold these lows around 33. This pivot lows around 33 in JD.
Wait, South Asia,
Southeast Asia, yeah,
like Indonesia. That's been terrible.
No. I just named 3 countries.
Vietnam hasn't been great either.
Vietnam has been great. Okay, Vietnam's been excellent. Look at it digging in at those lows, rocking higher. That's a long dong trade.
Okay,
I think you get involved in Malaysia too, but my favorites are Philippines, Thailand, and Vietnam. Vietnam has a really big level down around 11, right? And you got a nasty shakeout whipsaw move down to $10, right? And then a monster scoop and score higher. That's like a perfect scoop and score.
All right, let's bring the Warlock in the house. Kenny Glick is here. Let's see what he's trading this morning. You guys ready for Kenny? I am not ready. We're about to be ready. We don't have a choice.
It's been a long time coming. They ain't come for my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
In Vietnam, he was 19. In Vietnam, That's all I know about Vietnam.
I don't know what song this is.
You wait for the 80s, baby.
What was that?
About Vietnam. That was Paul Hardcastle with 19. Was shaking.
All right. I don't know. You tell me what's shaking. You getting down and dirty?
Let me turn down the music. I'm blasting this and it can't even hear this.
Getting down and dirty in some Domino's this morning, or you're buying the dip there? What are you doing?
No. Well, right now we're talking about the overnights. Held long queues, short UVXY because it was such a great Friday. A lot of sloppy trading, but bullish trading over the last couple of days. But that continues to be bullish. So if anybody is wondering, I want to get this out there. The bottom's in. There's not going to be another shoe to drop. There's no more rug pulling. As a bear that's been trapped in a perpetual bull market, usually we go through stages of whether or not the market has bottomed or not. If you're still wondering, yes, it has. If you're already starting to regret not buying something, the bottom's in. And if you're still debating,
Dude, that's been me for 3 weeks.
Yeah, there you go. The bottom's in. The bottom's in. But the real action was this follow through above the Trump candle. So that monstrous move, QQQ, was around 466 and change. Once we got over that, the next target up was 477. So we were long and strong Friday, especially after the chop. And UVXY is finally giving way. So if you guys trade UVXY, just a wonderful product to watch on a daily basis. And on Fridays, when it's disintegrating, you can trade some options on it where you're getting, 5x, 10x on your money just for the day.
Is the UVXY on Friday, is that just a phenomenon of the way it's built and it has to do some resetting on Friday? Is that why?
Yeah, a lot of times Mondays and Fridays it seems to get a lot more hammered. But when you catch it on a Friday, it's great because you have options expiration. Generally, the options are rather overpriced. But it's also a sign that the market is, stable. And as UVXY goes down, so the market gets stable. And next thing you know, it continues to build on itself. And here we are. But, forget the longs that we held over the weekend and short UVXY. I'm glad it's working out for everybody. You didn't have to come in long the Qs or short UVXY. This is happening right here. Also, again, we have the most important earnings season in the history of mankind, as everybody says, right? This is the week. This is the week to put up or shut up for the week, especially for us, the QQQ traders. So you got, Amazon, Apple, and that's going to tell us where we're going to be. So a lot of excitement. I'm excited for the week.
Meta Wednesday, Amazon, Apple Thursday. It is a big week. It's weird because usually all the Mag 7s, with the exception of NVIDIA, usually they all report like kind of together. But we already had like Tesla and we have Netflix already. We had Alphabet already. So
yeah,
kind of a weird split up there. But
and I'm hoping that we see exactly what we saw. Again, we watched the market basically confirm its bottom live with JC on the Tesla report. When it held that prior day VWAP and went up on bad news, that was it. I mean, that was it. And we've been, again, some of us are swing trading the Tesla, and so far so good, especially on Friday. The follow through on Friday was phenomenal. I focused my attention on Schlumberger and Intel a little bit too long on Friday, but, Intel, the Qs, UVXY, it was pretty awesome. So, again, I think we're going to continue this. Maybe a little bit of slop today, a little consolidation, but I still looks like this market wants to go higher. And it's only going to be whether Apple and Amazon and Meta get in the way. So I'm curious as much as everybody else, but I'm feeling really bullish, and I don't like the way I feel. So,
all right, listen, guys, if you want to get into Kenny's room, there are two ways to go about that. One, you can go to hitthebid.com. But more importantly, you can go to this link that I'm dropping in the chat, which is the link to the replay of the stream that Kenny and I did last week. But below that replay is a special offer that I'm told will end this week. Special offer on quarterly and annual memberships into Kenny's room. So there is the link in the chat. I will pin it. There it is. It is pinned to the top. You should check that out now before the offer, I'm told, will go away.
If anybody's day was Friday was your first day, again, it started out kind of boring, right? 40 minutes of chop, and then it really turned into something special. So anybody shout out, thanks for joining up on Friday. I think we're also doing a free session, right? Later the week, right? Just another schmooze.
Oh, I might know something about that.
All right. We'll talk more about that during the week. But yeah, don't make plans for Thursday night. It's going to be a big night. We got earnings reports, and we're going to stay open 24 hours, maybe 48 hours straight.
Oh, God. I
All
worry for you sometimes, Kenny. I do.
Yes. All right. Be careful out there, folks. I'll see you soon.
All right. As much selfishly, I would love for Kenny to just be my personal trading monkey and just trade all day in the room. The guy's got to have a life too, right? He's got to get outside, see sunlight, touch the earth, touch the ground, drink something, eat something, you know? I hope he does that. I hope you do that, Kenny. All right. It is 9:02. Here's the plan. We'll bring on Sam Gatlin right now. And then at 9:15, we'll bring on Andrew Thrasher. So without further ado, Sam, are you here? I'm told you are.
Yo, happy Monday.
It is a happy Monday. It's always a happy Monday in our world.
It is.
Yeah.
I love hearing Strazza talk about long dong trades on Monday. And hard to beat that.
Can't beat it.
Yeah.
You know what? Actually, never mind. I was going to make a bad joke. I'm not going to. No, we're moving on. We're moving on. Okay. Sam, what's on your mind this morning?
Well, Spencer, did you see the Barron's magazine cover from the weekend?
I haven't seen a Barron's cover in a very long time. So no is the answer to your question.
Well, here you have it.
God damn it.
Barron's is bullish gold. Investors are loading up on the metal. Even in chaotic times, how long can it last?
Okay. In defense of Barron's, everything that headline says is true, right? They are merely reporting on what has been happening, right? And at least from the cover, I didn't read anything. Obviously, I don't even know this happened. From the cover, they're not making a call. They're just saying it's a crowded trade. Huh?
You're not wrong, but historically, this is a great thing to fade. You know, I believe it was in December when they came out with a rocket ship covered in U.S. dollars that said the U.S. was the envy of the world. And again, how did that work out? The U.S. dollar was making new multi-year highs, and then it got absolutely blasted straight back down to the lower bounds of a massive range. U.S. outperformed the U.S. more than it has in decades. So, Spencer,
I mean, this is not great, Bob, for the gold trade. But we'll have to wait and see, because as much as we love to joke about these magazine covers, it's not a perfect indicator. But I'd be very curious to see if they time this one as poorly as they timed the dollar, or actually any of the dollar ones from the last few years, right? They seem to always time it poorly. It has been a crowded trade, right? I mean, the gold highs. I mean, are the highs even in? I mean, the high was a week ago at this point, right? So, something you may not know about, these magazines is they can't just put it together in a day, right? It takes them, every print magazine, which Barron's is, it's a broadsheet, right? Comes out Sundays, right? So, it takes several days at least to put one of those issues together, right? So they were probably working on this, not probably, they definitely were, all of last week, maybe even longer, right? But at this point, the gold high was on the 22nd, so we're already a week off, a week beyond that at this point. But that's probably when they got this idea in their head.
For sure. And it's not just this magazine cover that's a reason to fade. Like, price is the only thing that pays us, so that is the main focus of us at All Star Charts. We've been telling members at Gold Rush that there's a big extension level here It makes a ton of sense for gold to correct at this level. Moreover, you have overbought readings on every single time frame. It's it like and very few times in history has gold been this extended from its 200-day moving average. You look at the monthly PPO, near its highest level ever. Same for the weekly, same for the daily. It's just on every single time frame it was overbought, and that's not bearish for the long-term structure. You have Mark in here saying that gold has pulled back a bit, but the long-term chart is unmistakably bullish. And I can't disagree with that. It's a very strong long-term trend, but over the short term, I think it's probably going to be a good fade. But that doesn't mean silver can't do well. If we can see slide number 18. So last week, gold had the other one. Gold had a pretty nasty bearish engulfing candlestick, but on that same day, silver was up 3%, and it had its best day relative to gold since October 2022. And as you can see here, it recently broke a big level of former support, and I think it has potential to scoop and score back above that level. And we all know that from failed moves come fast moves in the opposite direction. I think we've also been expecting silver to catch up to gold for a long time here. Sean has put on some trades there to take advantage of silver catching up to gold. I know members of All Star Charts options have definitely enjoyed that trade recently. But I think this certainly could have legs here. So I don't think you want to throw out all your precious metals or anything like that, but maybe let gold take a little chill pill and let silver let it dance. And then, here's another look of silver catching up to gold. Historically, silver and gold are very similar charts. But gold tends to lead the way higher, and that's exactly what it's done over the last year. It's absolutely screamed higher. It's been an amazing trade. It's pretty much just gone straight up with very little drawdown. I think it's time for silver to party.
Someone who is this? Sandra. I thought you guys were saying this is a super trend or a mega trend, right? And I think, Sandra, it all depends on your time horizon, right? What Sam was talking about, at least as far as gold and silver, are the immediate short term, right? I mean, gold just basically went parabolic, right?
For sure. I still think gold could hit $8,000, before the end of this cycle.
Dude, you always say the craziest things in terms of like, I think this could go to the $1 million. Right?
It makes sense. Just like I'm just projecting from the last cycle that gold had from 2001 to 2011. I see no reason why this cycle shouldn't do a similar thing. And if that's the case, gold should hit 8,000. But that's not going to happen this year, this month, this quarter. It's going to take years. So this is a long-term structural trend that I still think is very much intact. But over the short term, I like fading it.
Yeah, and again, you're going on the silver as a catch-up trade, right? Or as they say, mustard and ketchup. Sam, what must silver do to catch up to gold?
It has to go up, Spencer.
Oh my God! I don't know.
I
was hoping you were going to give me a number or something.
No, I think it doesn't need to be more complicated than that. I think you could come up with some fundamental reasons why silver could catch up to gold, but that's not really for me. I'm just a price guy. I look at the charts.
I meant what price would silver have to what's your level?
Yeah, so 35 is really the line in the sand.
Okay.
That's capped all of the recent rallies here. And if you zoom out to 2011 and draw Fibonacci retracements to the low, I think in 2015, at 35 level is the 61.8 retracement of that entire move. So if it's above 35, I think it has a chance to get to 50 pretty quickly. If you zoom out on the chart all the way back to, 1979 or decades ago, that was like when the Hunt brothers were squeezing the silver market. They cornered it. It failed miserably. Price collapsed epically, but that 50 level capped that entire rally. And it was resistance once again in 2011. So there's not really a lot of bag holders up there. You had 2 blow off tops up there at $50. So I don't think price is going to have much trouble moving up there. But 35 really is the line in the sand. If it gets above there, I think you'll see the catch up trade really pick up speed.
All right. Anything else you're watching aside from the gold silver ratio or gold silver trades?
Yeah, on this morning's beat report, we wrote about T-Mobile US, which actually had its worst reaction to earnings ever after reporting a double beat. It seemed like a great report, but it seems like the market is kind of concerned about its subscriber growth, which is a key performance indicator for the company. So yeah, I think that one is really interesting from the short side here. It resolved a nice little tactical top. The stock has like doubled over the last year, so that it's kind of unusual to see that for a giant telecom company like T-Mobile US. So I think that's a really interesting one.
I want to mention, guys, if you don't get ASC Gold Rush research, your life is gone, in the words of JC. Horribly wrong.
It's true.
I will drop the link in chat. Now, the name was a bit of a misnomer, right? Because it's not just about gold or even metals for that matter. Sam and Jason do cover the whole futures universe, essentially.
For sure.
Right?
We write about soybean oil and orange juice futures.
Yeah.
All kinds of things, even bonds.
Exactly. Yeah, right. Exactly. The whole futures FIC landscape, kind of, right?
Right. Yeah.
So I just dropped the link in the chat. Get ASC Gold Rush risk-free trial for everyone. You don't like it in 2 weeks, fine, but at the very least, check it out. Their reports are going out. What is it? It's like Monday, Wednesday, Friday. I think is your cadence.
That's
pretty
right.
much.
Yeah.
They do incredible work over there in commodities, in like he said, fixed income, and just futures at large. So
Billy Cunningham shouting out the IPI. We've been long that one. I like the IPI.
I don't even know what that is. What is that?
That is, I believe, Israeli, if I'm not mistaken.
Israeli?
No, that's not the Israeli one. Excuse me. It's like a $400 million fertilizer stock.
Potash. Great. Wonderful. Yeah. Well, the daily looks amazing.
Yeah, it does.
The 1 year goes from 19 to 33. That's not bad. So,
For sure.
Anyway. Oh, Steve says that's the old pot. Oh, they renamed it or they retickered it.
Why would you change it from pot? That's such a great ticker.
I don't know. That seems like a missed call on them, but you know why? Probably because the cannabis trade is so bad that they wanted to even know that they have nothing to do with that.
I might be wrong about that, but I think so. Old potash.
Okay.
Mosaic looks great too. A lot of these fertilizer companies are waking up. I like the MOS. Sure.
Yeah.
What's up, Sam?
What's up?
What are the best?
I love hearing you talk about your long dong trades.
Where's my dong? I don't know where it is. I was redecorating my office, but I have it framed here somewhere. Oh, there it is. It's under a bunch of books. It's just so important to look at the currency charts when you're buying international equities. So like it's a joke, right? The Vietnamese dong is where the joke comes from. But when we're buying something like B&M, we are pulling up a chart of dollar dong.
For sure. Yeah. It's one of the most important factors.
Got to do it.
Absolutely. How about that soybean oil, Strazza? I know you've been a big Brazil bull. If you overlay the soybean oil with the Brazilian real.
Ooh, I love it. Can you send me that chart?
Yeah, I will. Soybean oil is leading the way.
Really? So
yeah.
Brazil and beans is the relationship.
Yeah, absolutely. Yeah.
It looks like it. Totally.
For sure.
Are these Tecrium funds okay? Like to play something like soybean oil? Is that the soybean? Does that work? Or no, you got to go to the futures market?
I always prefer this futures market, but if you're not going to do that, then I think those funds are okay.
It's all we got.
Yeah.
It's all I got. Yeah, I was gonna say.
They
Beggars
just
can't be choosers, right?
No.
the folks over at Tookrim, and we just had Sal on, Sal Gilberti, not long ago. They just launched. Speaking of a little spice, they just launched a double ripple. Have you guys seen this?
I have not seen that.
Double
That sounds
ripple.
spicy.
Yeah. Talk about juice. XXRP. So that'll probably end well.
Wonderful.
Cool.
Hey, the market will decide. Sam Gatlin, guys, check out Gold Rush. Link in the chat. Sam, thanks, man.
Thanks, guys. Talk to you later.
Later, Sam. Andrew Thrasher, huh?
In the house, in the flesh. Well, not in the flesh because we're not.
There aren't many better technicians we could talk to right now than Andrew Thrasher.
Then let's bring him out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Andrew.
What's going on?
How are you?
Doing
Nice.
well.
Nice art in the background there. What is that?
Move your head. Move your
It's a
chair.
bull. It's a bull and a bear, and the artist did it all by. He never actually touched the paintbrush to the canvas. It's all by splatter.
It's one of those things. Okay, that's
Yeah,
awesome.
It's a bull and a bear.
That is some unique and awesome bull bear art. Because you find the bull bear art in a lot of offices, but that's cool.
Yeah.
That's really
on this wall, it's really cool. It's the patents to the first tickers. The first when they first invented like ticker tape.
No kidding.
The images of the patents for when they first did ticker tape and like the machines that would spit out like the first sets of charts.
That's really cool.
Yeah.
I got to get some market stuff in my office and take down the Barry Sanders.
Yeah, me too.
Well, it sounds like you had a framed dong that you need to put up. I caught at the end of your last conversation. I don't know what that was all about, but I didn't know what show I was calling into.
You want to see my dong?
Not really.
No.
I gotta redo this. They're like moving in here. It's not
Dude,
good.
other countries kick our ass in terms of currency. Like the beauty of it.
This is the dong. That's my dong.
Oh.
This is other stuff.
I'm sure it's bigger in real life.
Yeah. So
Anyway, Andrew, what are you watching here? What's on your mind?
Everything. Looking at a lot of sector stuff. Looking at everyone's talking about the bounce. Have we seen the low?
yeah.
Watching international markets. Watching a little bit of everything.
Let's start with the bounce and the breadth stuff. So
Love it.
you're one of the most trusted sources for any of these technical indicators. You do all the custom studies. I believe in Optima, and you're putting out great research about this stuff constantly. You've been doing it for a long, long time. You, from what I understand from your Twitter, are saying we did not actually register a ZWIG.
So really interesting. So it's whenever you have an indicator like that that's very heavily watched and it's people are trying to custom code it. And there's a lot of different data feeds. You have Bloomberg, Wall Street Journal, stock charts, Optima. That I wasn't seeing it on Optima, and so I was seeing it on stock charts. And other people were publishing charts saying they were seeing it. So I reached out to Optima, and what I learned and didn't know about their New York Stock Exchange data feed is that it's stock only. It doesn't encompass the entire NYSE, and so I didn't know that. Most of the time, if it's stock only, it's designated as such. And so talking with them, it came out to be the trigger for ZWIG is 0.715, and I was getting it at 0.615, and I was getting it at 0.614. And so saying, hey, we got really close. Maybe people are just rounding it or something. And so reached out to them like, no, that's just stock only. And so when you throw in the UITs and the international stuff, all the kind of the other stuff that's at the NYC, that's what pushes it to register.
So the ZWIG thrust is actually meant to include everything, even all the funds in NYSE. That's the way it's done.
Yeah, when he invented it, that's all there was.
Yeah,
I mean, it's a super old. Marty ZWIG is not a young dude. I mean, he's not even around anymore. I'm pretty sure he's.
That's really changed the way it's worked over time. Then with so many ETFs.
Yeah, so I track it on the S&P 500, and I track it on what I thought was Optima's using all NYC, but it's stock only. So then they sent me the data for the Russell 3000, saying you do it on that. I still have to play with that. I don't know if I'm going to start using that, but to answer your question, using the full set of NYC, you did get a ZWIG breadth thrust. I track about 18 different ones. So a lot of people, it's something that I've published for years and years is my composite breadth thrust. Starting to see a lot more people are starting to do that type of thing now as well, looking for clusters of them. Realizing if you just saw one or two, it could easily, we saw that constantly throughout 2022 and 2018. You see these rallies, and you'd get a bunch this kind of thrust, but it was just maybe one piece of the market that got it there, or different types of things. So the way I look at thrusts is look at a composite of about 18 of them, and then I divide them up into two. I've shared the chart on Twitter and in my Thrasher Analytics letter. Kind of looking at the primary ones. Yeah, that's the chart. Look at kind of the primary long-term ones, the ones that are very rare to trigger, that you only really see these really after a low. Then you have some other shorter-term ones, like number of stocks above like 20-day moving average, or something that doesn't take a lot to get them there, but it does show some buying thrust. So that's what makes up kind of my full composite.
I love that. That's the way, that's got to be the way to do it, because you don't want to give too much weight to any one of these thrusts. Like we just talked about a number of issues just with the Zweig thrust. So the way you could trust a breadth thrust is they're all just firing, right? It's like, oh, this one fired, that one fired, that one fired. And then you're like, oh, we're good, right? You don't have to worry about the specifics of anyone, or whether you're using NYSE Common only or NYSE Common plus all the funds. Then that kind of stuff matters a lot less. You're looking at 18 of these.
Yeah. So I look ones across volatility, across volume, across price, across sector, a lot of different ways to say, where in the market are we seeing just a lot of buyer come in? And you look at 2022 on this chart, we saw a ton of them after the kind of when we had the two major lows, and those were decent places to say, hey, the market's kind of coming back. Same back in 2019, 2018. We saw 3 kind of the relief rally, and then we started seeing 6+ after the final low.
Do you think we'll get the primary long-term this is something like new long-term highs, probably, right? Percentage of new long-term highs and stuff like that.
So one of the ones in primary is percent above 50-day moving average, when you start seeing like 90% of stocks back above the 50-day. And so it takes a lot to get those types of things to trigger. But it's types of things that you very rarely are going to see a lot of those in just counter trend rallies.
I think if we're heading right back to new highs, like a lot of these international indexes are, right? So I'm trying to stay really open-minded to the S&P 500 doing that. This isn't some sort of extended bear market like 2018 or 2022. Then at that point, it would just be like a really swift corrective wave. Sure, we hit the 20% and like a nice reset. I don't know if you'll get the primary trend stuff, but you'll get the short term, right? Yeah.
So what I found, like when you start seeing breadth thrusts, but you don't see a lot of them, that they really start to struggle at those key moving averages. Like we saw kind of in 2022 and again 2018, just those being the last 2 major ones, that when we got back to like the 50, 200-day, you really started those trends start to exhaust. Whereas when we really break through those levels and they hold in a support, that's where you start to incorporate, like again, breadth thrusts aren't everything. You have to use other form of analysis. Where are we seeing leadership coming from? And things like that. So I think breadth thrusts really kind of say, hey, there's the doors open for, we're really seeing buyers step in. What's up next? Now we're starting to look at what leadership is, price holding support, on doing what all technicians do.
So where is your head at for the major averages in the US? I mean, you think we're going to V here, or is this going to be a more prolonged thing and we chop around and it's messy for a while?
So one of the big lessons I've learned, and 2020 was probably the biggest one. Everyone thought we were going to double bottom in 2020.
Oh yeah, I remember.
And I was firmly in that camp. Every analog you looked at, from Black Monday to the Great Depression to when Eve ate the apple in the garden, every single, you go as far back in history as you want to go, they all were double bottoms. And I remember we did like the big chart fest type thing. You had we had all the technicians. Every one of them. Frank Capinelli was like the only one who was saying, no, we're going to be.
And Gina Martin Adams nailed it too. Shout out.
So I very much was in the camp that everything looks like that we should see a retest, and the market ripped. Part of it was obviously the Fed stepped in and everyone got checks in the mail, and that really helped stabilize things. So right now we're not seeing the Fed come in. Instead, we're seeing the president threaten the Fed. And so I think that can be a part of it. If we do see intervention into the market, you have to recognize that the charts are important, but you have now another not really invisible hand involved. So I'm not trying to put my mind into an expectation that we're going to retest. It's really looking at what's the market moving. So after we saw the bottom in April 8th, where's looking at the sector relative strength? Where are we starting to see money flow into? So far, it's interesting. It's right back to what took us here. It was tech and community discretionary. Friday, we had 40% of stocks rallied, but it was enough because Tesla and Nvidia were doing fine.
Right.
So it's really interesting because that's not normal. Normally, when you see what we saw, again, 2020, 2022, what took you into that bull market then got destroyed. And then we saw other things like energy and things like that that really started to propel the market out of that. Now we're seeing the market kind of going right back to the person that brought him to the dance versus trying to see rotation. We're not seeing really a lot of rotation over the last, it's been a week. I mean, it's not been that much time.
So you would rather other sectors, right? If for a bullish thesis here, you would prefer to see other sectors kind of take the leadership reins from tech and discretionary and from the Mag 7 trade? You think that would be better for a broadening?
No, it's not that I would think it'd be better. I think right now, because you have such a large weighting in those stocks, that to have the market recover, they have to be participating. Right. You're not going to see energy REITs and healthcare drive this market higher if Nvidia and Apple are down 5%. Yep. And so I think it's interesting that my point's more, it's rare to see the market go back to what was the primary, the leadership from the primary bull market that was before.
Right.
It'll be fun if we start seeing financials start doing better. But I mean, right now, because of the market the way it is and the weighting, you have to have tech participate. So it's not that big of a surprise, but it's concerning that we see days like Friday where you only had 40% of stocks participate. But we have seen a lot of major upside days, major downside days. Like 80% of stocks go up one day, then the next day, 80% stocks go down. So we're still seeing a lot of volatility. And I think that can be frustrating. Maybe that's why people are going back to what they knew, saying, hey, if the market's going to be volatile, at least I own Apple. At least I own Nvidia. At least I own the mega caps, and I'll put my money into kind of at least what worked last time.
Yep. Maybe they're just vehicles for a bounce for a lot of people, right? Why not go to the big boys, the most liquid ones, the ones you're used to? I look at like a chart of XLK SPY right now. So the relative trend, tech versus the broader market, looks like a pretty nice failed top. Like tech is scooping back above a pretty key level. And whether it's counter trend or not, who knows? That looks like it's the place to be for right now.
Yeah, it's a decent place to hide out. The issue is if we do see, it's such a headline risk. And this is what I was talking to our advisors. I work for a wealth management firm, talking to advisors last week, saying, do we go back to the tech space? And my concern with it is there's so much headline risk to what's going on with China, in that we're seeing tariffs put specifically on chips produced by Nvidia, or we're seeing certain things that are targeting actual companies. And you can easily have something open up the next morning and one entire customer of one of these mega cap behemoth stocks is taken out, or you're not allowed to buy from it. And there's such headline risk there. I think there's other places to gain equity exposure, and that's what I'm doing. Than going to the place where you're seeing two countries are targeting this one area of the market. Yeah, you may find money there, but I think there's easier places to sleep in this market if you're trying to get equity exposure.
That's a headline risk that those stocks didn't really have back when they were leading in the early innings of the last cycle, right?
Yeah, it was everyone's going there because everyone needs AI, and here's the only company making chips essentially for AI. And what was to hate looking back, obviously 2020, but now there's so much headline risk, at least in the short term, that we have some tech exposure, but taking individual stock exposure is something that you really have to manage well. I'm not saying you can't do it. It's not making a recommendation not to, but I think that there's other avenues that I'm choosing to play equities than individual stock risk in the tech space.
I think that's a great point. I want to talk too about international. Speaking of places to go, there hasn't been a better place to hide out or rotate into, this year than international equities. What are your thoughts on stocks outside of the U.S.?
Yeah, so we run international models. Primary things we're looking at is the overall absolute trend internationally, and then the relative trend. I don't want to own international if I'm not going to get paid to take on that risk. I don't want the beta if I'm not going to get performance for it. And so that was the primary driver, what kept us out of international for so long. There was no reason to go anywhere else. You could get paid to be domestically, take the little bit less beta. That finally changed at the end of last year, start of this year, where we started finally seeing international rotate. And so then looking specifically, we started looking at some of the factors of international. There's certain factors, because I own them, I can't say what they are, but there's certain factors of international that are doing well. Certain countries, I think, are benefiting from the tariffs that we're seeing some stuff get moved towards. So some of the macro plays that have great charts too, because that's obviously going to be what's going to drive me to them. But you're able to kind of combine those macro forces, sector or countries that do have relative strength. They have good setups, and so it's nice to finally be able to diversify internationally and for it to be rewarded not just for providing diversified portfolio, but actually get paid for it too.
And I love your emphasis on the relative trends, right? And how you have to check that box if you're going to get into these funds, because it has been forever. And it's not that the absolute trends didn't look good a year or two ago, but the relative trends were still like falling like a rock. So that's finally changed. How deep are you going when you analyze like the relative strength characteristics? Are you just looking at something like all country ex-US or EFA versus SPY, or are you drilling into the individual countries and, like you said, some of the factors and looking at those relative trends also?
Kind of yes to everything above. So we do take exposure just broadly. We'll look at, like, and you guys are talking about currency, how important it is to look at currencies for national. So I think it's like you can't look at Japan and not look at the currency, because that is two massively different stories being told over the past couple of years. And so I think it's important to recognize that there are, and it's great now with ETFs, you have the ability to have an ETF that does currency hedge. And so you can take out the currency impact.
Something like DXJ. Do that for Japan.
Exactly. You're seeing a lot of wisdom trees doing that. You're seeing more of that. So we do look internationally or specific countries if we have a catalyst that's going to help that specific country and the currency looks okay. If not, it's probably going to be more developed countries than emerging market, just because of the volatility and the clients that we manage money for. I'm not going to take on some of that volatile risk. So we'll play by basket. Maybe I'd rather own just international or emerging market basket versus just owning Brazil or South Africa or something like that.
You think it's getting harder or easier to put clients or to give your clients international exposure with the headlines? You know, every day there's a new country, you know, doing talks with America or fighting with America with the tariff stuff. You know, are your clients kind of asking questions about that? And are they thoughtful of what countries you're putting them in based on all the headlines, the trade headlines lately?
Not really. I think it's an easier conversation to have. Say, hey, because most of the client questions we're getting are more nervousness about the headlines that they're seeing, that we're on the verge of recession, that the Dow's down this or whatever. So to be able to say, hey, we recognize that there's risks to the market, is what they're thinking about, is just the Dow or the S&P. We're trying to find opportunities for you beyond that. We luckily can go to other markets maybe that aren't being impacted as much, or maybe they're benefiting from it. There's certain countries or certain sectors in certain countries that maybe are going to benefit from some of the headline risks we're seeing here. So why not capture some of that opportunity for you while we recognize maybe there are some more risks here domestically. And so the fact that we can then show them, ideally knock on wood, some positive performance out of that, can help ease those fears and recognize that we don't need either. The only choices aren't just bonds, the S&P 500, and cash. Like we can own crypto, we can own commodities, we can go internationally. You can have a portfolio that has so much more than just SPY and money market.
How about something like IBIT right now? Speaking of relative strength.
Yes, crypto. I can't talk about specific tickers, but Bitcoin, I can talk in general. Yes, it came down. The weekly chart looked beautiful. It's holding support. We had some consolidation. It's now breaking back out. It was really interesting for a lot of last year. It really had tied its correlation back to the NASDAQ. It was just a high beta tech trade. Right. And now you're starting to see it really get out on its own. And it's a beautiful thing to see. It's a nice diversifier to get something that has a little bit less it can have less correlation with some nice right tail opportunity.
You know, these Mag 7s, they rotate leadership. We see it all the time. And I think of Bitcoin as just kind of in that group. Right now, it's one of the stronger ones. I think of Netflix basically with the Mag 7s too. You got Netflix and Palantir and Bitcoin. Now they're the leaders, right? Stuff like NVIDIA and Google's been banged up pretty good.
Yeah, I think Bitcoin's really interesting. I think you when you kind of look back, everyone got really excited with Trump was going to be pro Bitcoin, pro crypto. Then we got the crypto czar. Then we got the strategic reserve that was going on crypto. And so you saw a lot of bullishness towards that. Then there was the asterisk saying, oh, they're not actually going to buy any more Bitcoin. And then we saw Bitcoin pull back kind of on that news, but it still maintained its long-term uptrend, still was holding support, which was still constructive, that you had these negative headlines to it, that Trump wasn't going to start rushing in to his Coinbase account for the strategic reserve. And it held it for support. It probably shook out some of those weaker hands. And it's still, I'm similar to you and JC in that I don't know what it is. If I can make money in it, I'll own it. I'm not a huge we're going to replace the dollar. I really don't care, But if it's a trend going higher, I'll ride it as long as it does.
I'm with you.
Yeah.
Any thoughts on dollar rates before we let you go?
Not really.
Nothing, right?
Yeah. I manage money. His name's Adam. He handles our fixed income stuff. He's a CFA. I do more stock, crypto, commodity stuff that moves quicker.
Yeah. How about gold, precious metals? Seems like everybody's in. Is there room to run here? Or?
Yeah. So we have exposure to gold. The biggest tweet out chart last week that it was really extended relative to the dollar. And so that can be some pullback. Did see some COT data. Money manager had pulled back a little bit in gold. I really, one of my favorite gold charts is to try, and it's not custom to me. A lot of people do it. Look at gold in multiple currencies. So are we seeing it rise in the franc, in the euro, in the pound? Is it rising because of it's a currency play, or is it rising because people are actually interested in holding gold? And so when we start seeing gold move higher in dollars, is it getting confirmed in other currencies? And so far we have been. Same as when we start seeing gold pull back. Is it just pulling back in dollars, or is it pulling back in these other currencies? And so I think that's one of the most helpful charts that I track is tracking gold across currencies to really know what's moving gold, supply and demand of the actual currency or of the commodity, or is it a currency play?
And right now, despite the strength from some of these currencies, you're still getting confirmation with new highs in those currencies.
You still are, yeah. I think when I looked at the chart yesterday, I think all but one.
That's great.
Yeah, so I think gold is pulling back. It's had a huge run. That's what you typically see. So it could have pulled back some more, sure. But I still think the opportunities for gold are still there. It's still an interesting play. I think the chart still looks fairly decent longer term. So
I love it. Andrew, thank you so much. As always, it's always a pleasure, man.
All right, have a good week.
Thanks, Andrew.
We got through that whole interview with Andrew Thrasher without once talking about the VIX.
That's correct. That's fact.
It's probably a nice kind of change of pace for him. He definitely probably gets tired of getting asked about the VIX because he's the VIX.
I don't know. Andrew, do you get tired of getting asked about the VIX? I don't know.
Love hate VIX. Yeah. Makes sense.
Yeah. All right, guys. Let's get out of here. It's 9:38. We got things to do, things to trade, things to buy, gold to sell, apparently. Speaking of gold, all you members of AAC Gold Rush, you'll get your weekly video later today. Chart request live at 1 o'clock. Send us your ticker requests, questions at stockmarketmedia.com. We will answer them on the show. And that's what we have going on today. So thank you to Sam, thank you to Kenny. Don't forget about the offer in the chat to join, hit the bid, and Kenny. This offer will only go for a few more days. Use the link in the chat to get that offer. Steve, what'd you have?
Yeah, who's having more fun trading this volatility than Kenny? And shout out to Chart Request Live, because that's just a really special show that we do where you can literally go on and have your questions about a chart answered in real time by one of our analysts. So definitely tune in. Got any questions in this market, right? There's some big levels being retested here, Spencer. I'm writing about retests right now. Some big levels. So bring your chart requests. Maybe I'll hop on with the guys.
I think you should. All right, let's go do that. Everyone, thank you for watching. If you'd be so kind and hit the like button, I would appreciate that. Tell your friends, tell your neighbors. We'll be back tomorrow morning with Ari Wald. It's going to be NJC. He'll be back. It's going to be a good one.
Happy Monday, everybody.
Happy Monday. Go make some money. YOLO responsibly, as JC would say.
Always.
I can't take no loss. I don't even know what it costs.